Joining us now is Bloomberg's Natalia Najevich. Thank you so much for joining us, because you watch this market as close as anybody we know. And what do the biggest oil strategists expect from crude prices next year, given the volatility we've already seen this year?
So overall prices are really high. So they're ranging from $90 to $100 a barrel. So let's start with Bank of America. Strategists expect Brent crude at $100 per barrel, potentially spiking to 110 in the second half of 2023. They say downside risks are somewhat limited, but when it comes to upside risks, they can come from the European Union's embargo on Russian crude, faster than expected reopening of the Chinese economy, and potential pivot from the U.S. Federal Reserve in 2023. For Goldman, the biggest story is CapEx. They've been talking about it for a while. They say unless we have sufficient CapEx, prices will remain elevated and really high.
Well, you mentioned the Russia story as well. Let's talk about how it's actually being priced in when we're talking about its response to the price cap.
Yeah, so this is the biggest wild card for crude market. If we look at flows and exports from Russia, during the first week of price cap on Russian crude, Russia's seaborne export decreased by 54%. So this is huge, and this will potentially impact crude markets in 2023. Today, we've heard from Russia's Vice Prime Minister Alexander Novak. He said that Russia can decrease production by about 700,000 barrels a day in 2023. So this is definitely a bullish scenario for crude.
A bullish scenario, but let's talk a little bit more about the bears for a second, because it looks like there are a lot of bullish scenarios still out there. It kind of conflicts a lot with what we're seeing from our own Bloomberg intelligence here on the outlook for next year. So as far as anyone is bearish, what is the most bearish call and why?
This call comes from Citigroup. It's not a big surprise, because Citigroup is typically the most bearish shop when it comes to strategies for crude. They say the biggest risk for crude market is recessions around the world. It's still a big wild card for the market, and choppy recovery in China. Strategists at Citigroup expect Brent at around, if I'm not mistaken, like in range from $80 to $90 a barrel. But there is one more data point that they are keeping an eye on. We always talk about GDP as an indicator where commodity prices will go. And they say in the next 2 years, this correlation between the GDP growth and demand for commodities will go down because of faster supply from clean sources of energy.
Well, 30 seconds, Natalia. Not a surprise that we are seeing Ed Morse becoming the most bearish of them all. But I have to say, what is the range here? The lowest oil price is going to go and the highest?
The most bullish call comes from Morgan Stanley, and they are saying that aviation and recovery of jet fuel demand from China is the biggest upside surprise for the crude market.
This expectation that you're going to have a weakness in energy profits, I think, is going to be totally wrong. I mean, we're seeing this right now that in the last 6 months, the earnings estimates for the energy sector keep getting revised higher and higher, even though oil prices are falling. So, like, where's the magic there? And it's a lack of refining capacity. And if we do end up with oil prices rising, a bit because the economy is a little bit stronger and China reopens, then these companies soar. Right. So I think that's an area of strength that's probably underestimated.